Hello everyone, this is Weston Means with eXp Realty here in the Bay Area. I'm here to give you your market update for the month of June 2022. Every month, the California Association of Realtors comes out with their data for the previous month. So actually we're going to go into the numbers for May 2022, and then we're going to go into what those numbers mean in today's market, how they're affecting the market right now, how I am seeing these numbers affect the market, and what that means as a buyer, and then we'll go into what that means for sellers as well. So I'm going to focus on 5 different counties that I serve: New Alameda County, Contra Costa, San Francisco, Marin County, and Santa Clara County. We're going to focus on 3 key metrics. We're going to go over sales, the amount of homes being sold in the market today, and we're going to compare all these metrics to the previous year. So that would be the previous May. We're going to go over sales, inventory, so the amount of homes for sale, and then lastly, we will go into the price change year over year from last May, and these will all be percentages. So let's just get right into it. We'll start with sales. So sales in Alameda County from last May, they've gone down 10.7%. In Contra Costa County, sales have decreased by 7.5% from last year. In Marin County, sales have gone down 10.1%. San Francisco County is a special case. This is the only county that we're focusing on where sales have actually increased. They've increased by 14.2%. So, it's one of the counties where there's still going to be a little bit of competition there. Santa Clara County, sales have decreased by 21.2%. That's pretty big. Inventory in Alameda has jumped up quite a bit. So it's gone up by 79.6% from last year. Like I said, during the pandemic, inventory levels were extremely low. We've finally gotten to a point where in pretty much all counties, the inventory levels are back to kind of like pre-pandemic or approaching pre-pandemic levels of inventory, because for the last 2 years they've been incredibly decreased, which has created a lot of competition, bidding wars, and things of that nature. So 79.6% increase in Alameda County. In Contra Costa, the inventory is actually more than doubled. So it's gone up by 102.2%. So there are way more homes for sale in Contra Costa County than there were last year. And then, you'll see how this affects the change in price year over year for all of these counties as well. That's the next metric we'll go into. In Marin County, inventory has increased by 6.4%. So nothing crazy there. San Francisco County inventory has increased by 10%, but as we saw, the sales have actually increased. So there's 10% more inventory, but sales have also increased by 14.2%, which means that competition is still pretty intense in San Francisco. Now, in Santa Clara County, the inventory has increased by 38.5% from last year. So not quite as much as Alameda or Contra Costa, and inventory has increased more than sales. Sales increased by 21.2%, and inventory increased by 38.5%. Next, let's go into the percentage change in price year over year. In Alameda County, from last year, prices have still gone up by 17.7%. So still fairly sizable increase there. Contra Costa County, this one is the lowest out of all of the 5. It's only gone up by 1%. So Contra Costa County has seen the largest uptick in inventory. Sales have gone down only by 7.5%, but the amount of inventory for sale has more than doubled. It's increased by over 100%. So the price change has only gone up by 1%. Which is kind of unheard of in the Bay Area. In Marin County, the price change year over year has been 11.3%. It's an 11.3% increase. In San Francisco County, the increase has been 6.1%. And in Santa Clara County, the increase in sale price has been 15.1%. So, these increases are, in some counties, significantly lower than they were the year before. In the years 2020 and 2021, we saw an average of about 20%, a 20% increase across the board, pretty much in all counties in the Bay Area. In some of these counties, we can definitely see that the sale prices have slowed down. It's becoming a more balanced market. So I'll just quickly go into what I have seen personally in the market, being an agent that's out there every day, in the trenches, so to speak. So I have seen a lot of these listings stay on the market for longer than 3, sometimes longer than 4 weeks. And that was completely unheard of in the past 2 years. You know, in 2020 and 2021, we would see listings hit the market. They were prepped pretty well and they would sell a lot of times within the first week, but I'd say the majority of them would sell within the first 2 weeks. So now that we're seeing listings stay on the market longer than 2 weeks, it's an indication that sellers are losing some of their leverage in the market. There's a lot less competition per listing. So a lot of these listings, I'm also seeing the listings are receiving 2 to 4 offers, whereas before they would have gotten more than 5. You know, what that means is sellers are having to become a little more realistic on price. They're realizing that they can't get the sale prices that they were able to get before when rates were a lot lower and buyer competition was a lot higher. Also, inventory was lower. A lot of these listings are staying on the market. Buyers are starting to get a lot more leverage. You know, when you see a listing that's been on the market for 30 days or more, a lot of times a buyer can just walk in there. They can kind of dictate the terms. They ask certain things of the seller. Can the seller cover this closing cost? Can they take care of the sewer lateral? Can they pay for the sidewalk, you know, to be brought up to code and all those kind of things? Whereas before, buyers would have to waive all of their contingencies up front. They'd have to waive inspections, a lot of times appraisal contingencies, loan contingencies. So they were really just risking everything to get the home. Even if they were financing their offers, getting a mortgage, they would still have to waive pretty much all of their contingencies up front in a multiple offer situation for a home they really wanted. Now it's more like they see a home that you really like, but it's been on the market for a while. I mean, maybe it received a couple offers, but the seller didn't get the number that they necessarily wanted. And so those buyers moved on. They're not willing to pay these crazy prices that buyers were willing to pay before. And then, you know, that presents an opportunity for another buyer to come along. Some time has passed, the seller has realized, oh, I can't get the price I was able to before. And so now the seller is becoming more realistic on the price, and a buyer can just come in, make an offer for something that they feel is fair. And then there may be a little bit of back and forth, a counter offer situation, but ultimately buyers can arrive at a price that makes sense for them, and they can get a lot more favorable terms. So they can go in with an appraisal contingency, with a loan contingency, whereas, like I said before, that was pretty much impossible. Now let's go into sellers. So sellers, you know, I hate to break it to you, but unfortunately, in most areas, the top of the market, you know, we've reached the crest already, you know, and this is due to a lot of different factors. The interest rates have gone up. The Fed has said that they will raise the interest rates a couple more times this year. So we're probably looking at rates in the 7s by the end of the year. The rates right now are at about 6% for a 30-year fixed mortgage. That's about double what they were at the end of last year and even at the beginning of this year. So that has caused a lot of buyers to decide to put their search on hold for a while. A lot of buyers have dropped out of the market. I've seen it quite a bit. And so that means there's less competition in the market. At the same time, inventory has increased as the seller confidence has returned to the market because we're kind of coming out of the end of the coronavirus. In a lot of people's minds, we're coming out of the pandemic. Lots of folks are triple vaccinated, quadruple vaccinated, things like that. So that has caused an uptick in inventory, while at the same time, the rates have caused a lot of buyers to drop out of the market. So what that means is sellers are going to have to be a lot more detailed and diligent when they prep their homes for the market. You're going to have to make sure everything looks perfect, the staging, painting, deep clean your home, make sure everything is buttoned up, you know, get pre-sale inspections, home inspections, pest inspections. That way buyers will have a lot more confidence going in and purchasing your home. And if you don't provide the pre-sale inspections, expect to have buyers that come in with inspection contingencies. They may hire their own home inspectors to go into the property and see what's what, take a look at the foundation, the roof, things like that, and just make sure everything looks good. Don't expect your selling prices to go 20%, 25% above list price anymore. That was happening before when the rates were a lot lower, inventory was much tighter, and buyers were just fiercely competing for these very few listings that were on the market. That's no longer the case. There's a lot more homes for sale. There's less buyers in the market because of the rates, as I said. So, if you're going to put your home on the market, you're going to want to price at a more transparent price, which means that you're pricing it closer to what you would be willing to accept. In the past 2 years, there were a lot of pricing strategies where you might list a home at a $699 price and expect it to be sold at $1 million or something like that. And that was very common. I've seen a lot of listings be listed at 99 prices and then they sold for hundreds of thousands of dollars above list price. In places like Berkeley, they might even sell $1 million over list price. There's just a ton of competition in Berkeley for some reason. So, just be aware that you may not get the prices that you would have gotten before, but you're still getting a price that's higher than last year. So you're still benefiting from the appreciation over the last year. And yeah, those are my 2 cents for sellers. Buyers, those of you guys who have been waiting on the sidelines for a while, now is your time. Now is the time to hop back into the market. Even though rates are at 6%, if you buy something with a rate at 6%, if the rates go down, you can always refinance into a lower payment. A lot of financial analysts and real estate analysts are predicting that rates will go back down. So in that case, you can refinance into a lower payment. And then if the rates continue to rise, then you'll be happy that you got the rate that you did. So I'd say not to wait. I mean, the longer you wait, the more money you're spending paying rent, paying someone else's equity if you're a renter. If you're a homeowner, if you're happy in your current home, you might want to stay there for a while. If you want to make a move, still a pretty good time to sell. It's not as good as it was a few months ago, but you're still getting prices that are higher than they were last year. All in all, transactions will continue to happen. It's just a much better time for buyers now that things have kind of evened out a bit. So I hope this really helped you guys understand what's going on in the market. If you have any other questions about city-specific data or anything like that, please feel free to get in touch. You can text me, call me, email me. My contact info, as always, is going to be below, so feel free to get in touch. And have a wonderful day, and I'll talk to you soon.